All right, let's talk about the mystery charts and the methodology in action. And with this nice little, and I know I said the word bull market earlier today, and that's probably a dangerous thing, but with this nice bull market intact so far, check back often, we've had some nice opportunities. And I also want to really get into the peak trough analysis, and that's what took me a long time to put together. It was a little harder than I thought it would be. But anyway, we'll get to that in just 1 second. So a new mystery chart for this week, nice longer term uptrend intact. Look at the Landry light. We've got 54 bars of Landry light vis-a-vis the 30 EMA, which has become my favorite moving average. And I know you want to party with me. And that means that the lows have not touched that moving average for a long time. Nice little TKO type of move. And there's the parameters down below, entry of 29.50, protective stop of 23.50, initial profit target, that's IPT of 35.50 for risk of 6 points. And that sounds a little ludicrous. Even ludicrous would say that's ludicrous, but that's what it calls for based on the volatility of the stock. So the entry is here, stop is here, and the IPT is here. So far, no trigger, but we'll see how things shake out, obviously. Now we have a mystery chart reveal. This stock was in a nice longer term uptrend. Also, you had lots of Landry light, as you can see, about 50 bars, where that low never touched the 30 EMA. By the way, as I've said before, I've been thinking about like a one pattern challenge. It's like we put together a team of guys and girls, and we just trade one pattern, and that one pattern would be Landry light pullbacks, and it would be a little bit of a kind of a mentoring type of thing where you would check with me and whether or not I approve the setup. I think that this would really work, and I haven't all put it together, but I think that like some kind of guarantee by the end of the thing is like, if it didn't work out for you, fine, get your money back or whatever. But I think it would be a really good thing to do. And like I said earlier, the missing piece for me, and I got really lucky early on, I work with a successful stock trader, and I was helping him pick stocks and find stocks. And eventually I was doing a lot of the stock picking myself for him. So it kind of gave me a chance to fail, so to speak. And we will fail a lot in this business, believe me, even after you've been at it for a while. But it helped me to get a lot of that bad behavior out of the way early on. And just seeing someone actually do the trading really helped me out just absolutely tremendously. But anyway, nice persistent uptrend remains intact, pulls back to the moving average. And that's when the Landry light goes to zero. Remember, the Landry light goes to zero when the price bar intersects the moving average. And then you actually had a couple of bars of Landry light below. But the trend was so strong, I wasn't too worried about that. There's your parameters. Entry here, stop here, additional profit target up here. And it is TGEN, TGEN. And I'll follow up with that one in upcoming webinars to see how it does. So here's a mystery chart reveal. And entry was here, stop was here, initial profit target up here. Let's see what happens. Nothing. It did not trigger. So no capital was put into harm's way. And that was NAGE. That was a recommendation from a week and a half or so ago. And by the way, if you want to see all of these, you can go to davelandry.com/archives. You could also check my YouTube channel, YouTube/Dave Landry. Anyway, here's a mystery chart update. This is VG, was recommended recently, first recommended on 6/27/25. And you can see it was in a kind of a gradual uptrend. Then it began to accelerate higher nicely. Notice you had nice Landry light. Also, bigger picture wise, you had a cup and handle pattern. I don't trade directly off of classical technical analysis, but I do use it as kind of a backstop for my setup. So if you have a big cup and handle, a big nice cup and handle, and then you've got a nice little Landry light pullback or some other pattern like a TKO, whatever, then that kind of helps to kind of give you a bit of a backstop, so to speak, or kind of helps to, a better analogy, I guess, would be, gives you a little bit of a wind in your sails. Anyway, you can see Landry light goes from 30 or so down to zero as the stock pulls back. Entry was here, stop is here, initial profit target is up here. And so far, not so good. You can see so far it's failed miserably. We're already down 1,080 per 100K. So we should bail out, right? No, I'm going to stick with it. We'll see what happens. And yeah, it might suck. So far, it sucks. But you can see there's an open portfolio right there down 1080. Now, remember, as you'll see in some of these other ones in here also failed miserably early on. Doesn't mean that they always will come back. Sometimes they won't. That's why we use stops, right? So here's a mystery chart, or actually not a mystery chart update. Nice acceleration, nice persistency. Pull back almost to the moving average. It's a pullback though. If we were doing the one pattern challenge, I would say that's close enough to fitting the bill for that particular pattern. The market doesn't always work in exacts, as you know. All the parameters are listed down, or actually you can look right here, BTM, because it's already triggered. And this is another one of so far not so good. It triggered and it made a big move higher. It's kind of off to the races, and we're feeling kind of good about it. And then it came back in again. So I hate to use the word hope, but hopefully this one will work out. And either way, I'll do a dead money report, because you were instantly making money, then you were losing money, then you were making a decent amount of money, and now you're back to losing money. And the initial profit target is up there. So this week, I'm not going to get into a million little things, but one of the million little things we talked about is knowing the nuances of a methodology, and that kind of dovetails in with see each position to its fruition. So you definitely want to try not to micromanage yourself out of positions, even if it is painful. And part of the nuance thing is it's the occasional outlier where you get paid. As I've said 1,000 times, like right around now, because things are doing really well, I'll probably get a couple of emails saying, Dave, I'm quitting the service. It's like, why are you quitting? Well, because I can't make any money. I lost money on, God forbid this BTM, but let's say some prior winners recently, prior losers recently. I lost money on XYZ and ABC. It's like, okay, well, did you get TFPM and KGC and KTOS and all these other ones that are doing really well? No, I didn't take those, but I took those turds you recommended. It's like, well, like the cat inside of the PC meme, there's your problem. Anyway, so far not so good, down $356 on the position. Now here's an update on KTOS. You can see nice accelerated uptrend, also a persistent uptrend. It doesn't look quite as impressive because the scale is so big now, thank God, because we had such a nice move out. But you can see this another one of these Landry light pullbacks. Started out as kind of a TKO, turned into a Landry light pullback. I'll talk about TKO in a minute. When it goes down to the moving average again, the Landry light goes to 0. There's all your parameters. The entry was here, the stop was here, initial profit target was right here. Now, this is on a hypothetical 100K account. I do take these positions myself, and I do take them across multiple accounts, but I have one account that I've kind of dubbed my model, and that's where I take close to the exact position size, whatever I recommend, and then I'll take that just to show you that the trade, that I actually took the trade actually works. And then, like I said, in other accounts, I'll do something very similar. When the IPT is hit, you want to bring up your protective stop to break even. So that happens intraday. We don't adjust stops intraday unless we hit the initial profit target. I know I say this a lot, but I'm going to keep preaching it. And again, it's really good to see this stuff in action, so you can see that it can actually work. So per 100K, you're going to bank $1,000, 1% is what we're looking for in the first loaf, and many percent, hopefully, on the second loaf. And then after that stop is to break even, and you bank the $1,000 or whatever the case may be, depending on your account side, trading 2% if stopped out, okay? Then you begin to trail your stop somewhat loosely. And the idea is to let it widen out so you can capture that longer term trend. Now, keep in mind, if you do this properly, and I don't know what the HV was when we got in this one, but I guarantee you that it's grown since then. So if you do this properly, if you're trading properly and you're catching trends, catching momentum, then that momentum begins to accelerate higher, as it did in this case, okay? B, the price gets higher if you're buying stocks, right? That's a good thing, right? And as these things happen, that increases the amount of price drawdown is needed, and you're also trying to adjust to the longer term volatility. So if everything goes right, the volatility of the position will increase as all these aforementioned things happen, the acceleration in trend, and the price goes higher. So you want to slowly open up your stop to adjust to that longer term volatility. And I hate to use the word hope, but hopefully stay with the position for a long, long time. And that's the secret sauce. And someone who is way smarter than me, way smarter than I ever be, he was running a Forex arbitrage fund. And we were on a project together along with Greg Morris and a whole bunch of who's in the industry. Larry McMillan. I'm trying to think who else was on there. Just you name somebody. Tom McClellan may have been on there. We had options people. McMillan, I think, was one of the options persons. I definitely know that he was. But anyway, it was interesting that this gentleman that was running this hedge fund said, it's kind of cool what Dave's doing. He's trading with a tight stop, a relatively tight stop, actually, shorter term, but he's sticking with the position and taking profits and trailing the stop. And he was very impressed. And I was very fortunate. This project didn't last. It was a $40,000 newsletter. And I think we only had one or two clients. And it wasn't because lack of performance. I think it was probably a little bit of lack of I don't know. It's kind of, you hate to play the blame game, but anyway, it was a lot of work for the people that were running it, and they needed marketing and all kind of other things. But my claim to fame with it, and I know this is kind of bragging, but so proud of it, is when I met Larry McMillan in person, I stuck out my hand, and I told him who I was. He goes, "I know who you are. You were on fire in that project," and I was on fire. And the brief story there is Peter Mothy asked me to join. I said, "Peter, you don't understand. I might go weeks and maybe even months without any recommendations. And the only way we got paid was to recommend something. So there was a little bit of incentive to put something out there so you can get a piece of the pie." And I said, "Look, I might go a long time without setups." He goes, "You're the exact guy we want. Don't invent trades." And so, wow. So I was like, okay, well, I'm going to do this. And I was a little nervous, I think, to start to put up that first trade. I waited till everything kind of lined up. And then I put up the first trade and it worked, and second trade it worked. And then we ended up in kind of a bit of a bull move at the time. So it wasn't that I was a genius. It was like the momentum was happening and I was able to get in and capitalize on that momentum. Kind of like we're doing now, knock on wood. It's always whenever you feel good about trading, it's you're getting ready to get the rug pulled out from under you. But anyway, so far so good on this one. We've got $1,000 banked. We've got $2,300 and change open, and we'll see how it shakes out. KGC, this was a dead money report recently. Entry was here, stop was here, initial profit target was there. And this thing gave us nearly 2 months of not making much or any forward progress. In fact, on a net basis, almost 2 months, you could see it was negative, which leads one to think it's dead money. I better get out. But the thing to do is to follow the plan. And we were able to bank $1,000, get the stop to break even, and $600, $680 open as of a few minutes ago. TFPM, another one of these ones that's kind of a dead money type of report. And if you go in, if you can't sleep at night, go in and watch last week's presentation for the weekend charts. Or if you go to, I have a YouTube playlist, and it's YouTube/Dave Landry, and you can find it. It's called Methodology in Action, where I take the methodology in action portion of the weekend charts, which is going to be the most of the weekend charts this week, and I put it in as a separate video just so you could see things shake out. But in this case, if you go in and watch last week, we were down like $1,600 at this particular point in like a week, and that's kind of hard to stomach. And as I've said before, the old me, it'd have been really, 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 really hard for me to hold on during such a drawdown, and such just hard to look at a losing trade every day, and it's hard to follow that plan and stick with it. Now, of course, you're going to get occasionally stopped out, but for me, the pain of missing out is much worse than FOMO, fear of missing out. And the pain of missing out, or POMO as I sometimes call it, is when you're in a stock or you want to be in a stock, there's something you like and you forget to take the setup, or you decide to micromanage yourself out, and then that stock takes off without you, and you should have been in it. That is extreme pain, and I'm not going to bring it up because it's pouring salt in somebody else's wounds too. But I did have one stock that I would have made $1 million on had I stuck with it, maybe even 2 million. But let's not go there. And I think about that one every day, especially whenever I have a loss. So you can see that one kind of turned into dead money, but we're still long, and the stock's at break even plus on this one. And so far, based on a mark to market, 1742, which is much better than a poke in the eye. Now,